JBlog 2010, July 11th. Last week certainly had some interesting fireworks. Made a low right here, which was um, the violation, the downside violation to a lot of support, and then the market jumped straight up. This is what I'm talking about when I'm talking about technicals don't seem to work anymore as well as they used to. I believe that Wall Street has become quite capable of manipulating technical traders and punishing them, making the charts basically say what they want them to say. And usually those actions take place either pre-market in the futures or they take place in the final hour of the day, where you frequently see that a day was pretty flat, and then in the last hour or so major activity takes place that brings, when you look on the daily chart, that brings the daily chart back into a view that is positive for Wall Street. Anyways, nothing changes. Basically, I see this as a short rally. Downside support was broken, and probably a lot of people went short. Bulls headed in their full force and created this. This smells like short covering right here. A couple of days up. I'm not particularly impressed by it. This doesn't make me run for the hills. Actually, I saw the very oversold position right here, and I actually took out a few longs, believe it or not. Sold them on Friday, possibly a bit too early, but I am rather early than late. And we had this run up on Friday. Again, in my mind, there's nothing special here. The 10-day moving average is still below the 30-day moving average, and fundamentally nothing has changed. So it's business as usual for all I'm concerned. I continue being bearish on this market. Here's the copper market. It has not made a higher high. Other things to keep an eye on are, of course, the VIX. The VIX has dropped, but it has not dropped to the former lows. The market is still a little bit concerned. It's not as worried as it should be. Um, and whenever people are not that worried, then it's not quite the bottom. Some interesting stuff here, news that came out. One of them is retailers are doing good in luxury goods. Yes, when there is a recession on and there are cutbacks, some people end up making a whole ton of money, and a lot of people lose a lot of money. But depressions, recessions are definitely beneficial to the people in the right place, because it allows them to get at money very cheaply. It allows them to fire employees, stop doing research, and basically cut expenses down to the bones. They can make a profit. It's not sustainable, but in the short term, it is very profitable for some people, just not the majority. So that's not surprising. He is a fund manager that has decided to reduce the year-end projection. He thought it would go to 1350. Now he feels it go to 1150. So we're having some doubts in the fund managers whether these great earnings we all hear about will actually come about. I say no. Once the liquidity has been tightened and free money borrowed from future generations stops appearing um, and being spent by people who didn't earn it, then obviously those great sales will disappear. China keeps talking about wanting to tighten liquidity. It might very well already be too late for China in terms of tightening. I do believe that they're looking at some pain coming up quite soon, because they definitely are in a bubble. That's the way I feel. I mean, not all of China is in a bubble because obviously they have a hugely growing population, but there's a lot of money that headed that way that will always create bubbles. They definitely have a bubble in their real estate. Currently, treasuries show a 12% of a double dip. That just is a personal opinion of bulls, and that's fine, no problem, whatever. Double dip will happen. Um, Two stories on Apple. People being very, very bullish on Apple. The big trading houses telling people, "Oh, buy Apple, buy Apple." Um, which is, Apple is quite expensive. I mean, it's a great company, don't get me wrong, but it is quite expensive. I mean, at earnings, um, let's take a look here at the Apple chart, and I have a PE of 2550. That means if you bought the entire company the way it is and nothing changed, you'd have to wait 25 years to get your money back. Not much of an investment for all I'm concerned. And they talk about, oh, blah, 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 growth in iPhone and iPad sales and so on. Yeah, but that's already priced in. That's why PE ratio is at 25. It's not at 10 or 8 where it really belongs, because that's what you usually should buy. A well-priced company has a PE ratio of 8 to 12, let's say. Everything over that is grossly overpriced. You would never buy a small company for more than that, so why would you buy a big company for more than that? Um, oh, the job growth that everybody's waiting for will boost as the stimulus ends, some guy says. Whatever. Yeah. What job growth? There is no job growth. China's car sales are slowing while they're really really fast. So slowing is not a big deal there. Um, this TD analyst, who is rated as one of the highest, with the highest accuracy in predicting currencies, sees the euro at par with the US dollar by 2011. It could very well happen. I don't really have a problem with this view. It would be very interesting. It would be a nightmare for the United States, and for anybody uh, who deals in dollars, because obviously it makes their prices much higher and the European prices much lower. So this is nothing to be proud of. This is trouble. Um, Rogoff is saying that the collapse is the property market collapse may hit banks. Now he's a known bear. He's very bearish. So I'm not paying too much attention. But he did wrote a book called, or he actually he was involved in the book about This Time It's Different, which is 800 Years of Financial Folly, and things always repeat themselves. So he does have some very good historical views. It's definitely bearish. European bank stress tests, there's no stress there. They're assuming that only very few of the Greek and Spanish bonds will actually fail. They will not, lots will fail. So those stress tests are silly. Japanese machine orders fall more than estimated, so the Japanese are buying less machines, which means less goods. U.S. apartment vacancies drop for the first time. I love this one because it talks here somewhere. It says, as an explanation, it's because as private sector jobs growth boosts demand in rental housing. No, this is people whose house is being foreclosed upon and they have to live somewhere. I mean, I don't know why some of these analysts are amazingly highly paid and what garbage they keep talking. Luxury homes are sales of luxury homes are fading away again, possibly signaling problems with money. These are some of the stories I'm following. I'm looking at this. I'm thinking to myself, fundamentally, this still sucks. So I'm going to continue staying bearish, and I'm going to be very happy about it. Have a good week. Good luck next week, and all the best. Bye.